All right. Good morning. Good morning. Today is Monday, day 11 of the challenge. It is July 21st, and I am excited. And why am I excited? Well, because I wake up excited to trade. I go to bed the night before looking forward to getting up, having my cup of coffee, and getting into the charts. And I'm also really excited because today I'm using a new streaming software, so I'm hoping that a lot of the low quality video, certain sound issues, and all that other good stuff is no longer present because it sucks to watch a YouTube video that is low quality. So I get that. So we got 4 minutes until the open, and I guess the question is, are you bearish or are you bullish? And I guess I'll let you know what I think. I'm a little bit of both. I think we just made the move that I was looking for. We came down into this zone, and I actually took a little long on an old account, and I ended up shutting it down once I saw this consolidation, and then I was realizing, oh, I need to start my stream. I didn't really want to manage both. So anyways, that was a W, and not much because I closed it here, and I was expecting to come up into this zone, so a minor win. I also ended up I didn't realize I had to win in quickly on 5 mics, and I didn't realize that the stop loss was only 40 ticks, so that was like not a lot of position size right there. So anyways, we've got 3 minutes till open. Now that the move is happening, I feel like I got to reevaluate a little bit. I'm going to roll over to this chart, and my anticipation was seeing price, where are we? Come down into the new week opening gap and seeing what kind of response we get out of that. At the moment, there was a positive bullish response coming out of that new week opening gap. And I wanted to see from there. So here we have a bunch of SMT down in here. Actually, don't know if it's from that low or not, but we'll take a look. I'm gonna go roll over to this chart. So here's the SMTs. We do have one from that low. It says, and it's correct, that is the low. So the move happened 920, and I was kind of wondering if that was going to be the case. It wasn't too pretty. There was this little inversion here. So let's wait for the 9:30 open. We got 1 minute until that happens. Just going to check the stream quality. Sweet. Like it's looking good. So then my prediction for 9:30, I'm guessing continuation. I'm not sure if it's going to give, much of a retracement. So we reclaimed this blue line is the 12 a.m. open after taking Asia low, which means, gosh, I don't have, there's this inversion. And all this liquidity up here. So I don't really know where I want to put my risk at today because it's Monday. It's no news Monday. That means any of the volatility in the market's going to come from 9:30. I feel like I could. Oh, wow. Look at that. So it is not even going to give me a chance to get in. It's possible up in here. It is running for my target without even giving me a chance to get in. Nothing I can do here. I don't think I'm going to go in. Sometimes it does this. It creates like this massive breaker right here, and you can just buy in on that breaker with next to no drawdown. We got 16 seconds here. Is that the stop hunt? That is such a huge breaker. I'm going to wait. Look at that. That's exactly what I was talking about. Let's see if it continues where if you would have done something like that. I get rid of this because at the moment not doing anything. Come on, little guy. I probably would have put it below that consolidation. But at this point, you know, is this a break or is this the stop hunt? So look at this right here. Hesitated, wasn't confident. This here to me is such a huge. I haven't back tested this. I've studied it a little bit because I've noticed that this happens a lot. What I was saying earlier was I wondered if 930 was just going to run up and give me almost no chance for entry. Bearish SMT starting to form. Kind of giving an option for a entry. London high is still above. That gives it a target. All this liquidity right here. I feel like if it was a stop hunt, it would have wicked up and got back down already. I don't think I'm going to get another opportunity in this macro to do anything. If 5 minutes going to make a change in state of delivery here. Right here. I guess the question is, do I set a limit order for a retest? Possibly, because I'm not thinking it is so far away from this 60 minute. Not to say it can't retrace back down. Could have been a little more aggressive there, I guess. That happened quick. I feel like if it was stop hunt, it would have already come back down. Now look at this. It's got all these like breakers here as it's taking these liquidity on the buy side up here. So what do I think? There's been no real no real retest of any of this, and it is possible that comes back down, does a retest, and then rips higher. I could get in a limit order, but it's also possible that this is the stop hunt. I'm not seeing it like that. And target acquired. So now things change for me. Now that this liquidity, the session liquidity, this time-based high probability liquidity has been taken, that means things could change. So I need to see some more information. At 7:35, 5 minutes after open, I'm gonna make a little note here. I don't know what to say, you know, like it's not that I missed my model, because that's not the formation. I mean, it is and it isn't my model. So I need to happened quick. need to maybe study. I don't know what to call this. It's like a massive version of my model, you know? But make note for me later when I go back and review my charts. Put that back with that. And let's just clean some of the stuff up. So we're seeing one-sided delivery since the open, two-sided delivery since we tapped into a higher time frame level. So we tapped into a 4-hour imbalance, 1 hour fair value gap, and we got a reversal here. So that's two-stage delivery. Look at that. I guess that is the breaker retest. Guess I was too slow. Going off the chart now. Zoom out a little bit. Here's my 4-hour prediction. My draw on liquidity was this high. Stop hunts there. My target was here. That. Cool. So now at this point, you know, internal range liquidity. So the price always moves from internal to external range liquidity. That's why this zigzag pattern is always prevalent on the chart. So part of the question here is there going to be a short presenting itself after taking this high? That's the new all-time high on the NQ. Or is it just going to rage for a while? Kind of like this right here. This took this high and just kept grinding up. But have SMT. There is a fair value gap presenting itself. Stopping short of this gold bar high, I don't think I'd short this. It's not time to short, in my opinion. I don't believe this is the Judas, so therefore I believe price might come back down. But I also believe that could have just been enough. And if we zoom down into a lower time frame, so that tailless candle, stop hunt, just a continuation pattern. So here is a fair value gap that formed, tapped into it. This is not my continuation model, so I can't get in on that. So today is no news. It's Monday. Expecting lower probability price action, but this is clean. I just can't do anything right now. I could have done something here. So I see some of the mistakes I made today already. So I was right because I was in on this on another account. Closed it down here, got set up to do my stream, and then I saw all this, and I was kind of eyeballing this as the breaker, and I was anticipating some kind of retest down into here, but instead it closed way up here, and that kind of sketched me out, like how big that stop loss would need to be. So I didn't, even though I could have used some other PD arrays, I could have stacked a few PD arrays, like this change in state of delivery, this or this fair value gap, and that fair value gap. So now comes the interesting part, I feel like. So there was two opportunities right there. And what, from a psychological perspective, like what now? Am I going to be chasing price? I want to make sure I'm not just trying to get into the move, because the theory is the candlestick should be able to move and you should be unfazed. What I'd love to see at this point is some kind of retracement back into discount, a stop hunt, and then I can get long. I believe we're bullish for the session, which I don't even think I got to talk about my bias, but doesn't matter now. So what then can we look at? So let's look at do this. Let's look at standard deviations of maybe I feel like putting on mine. They'll do my fit. That DMNs is a great indicator. I don't like that it doesn't have the half deviation. So two standard deviations. That's a potential level for a reversal. Anywhere in this zone, so somewhere up in here. I would love to see some kind of like boom, 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 boom. That would give me an opportunity. So I'm gonna draw this up here. I don't know, maybe we'll make it a little pink. Fun. So 7:44. It is 6 minutes. Ooh, excuse me. Till the next macro. I need to finish my coffee apparently. Which, thinking back to this, I guess, it's like this wasn't perfect for me. So maybe it was a good thing I didn't get in on it. It would be a little aggressive for me at this point in time to have entered here, because I've seen it a bunch. I haven't back tested it. I haven't traded it a bunch, if at all. Maybe once or twice I've taken an entry like that. Such an aggressive entry with a huge stop. Because I've also seen it too, where you get a candle like this and the next one balances out and just goes, what, bam, and then bam. So you do need a relatively reasonable stop loss, at least down into here, to have entered there. Holy moly. Okay, so here's a push up into the 2.5 standard deviation of Asia, which all the standard deviations are is you basically just take Asia's overnight range, this high and this low here, right? The high and the low of the Asia range. And you just project it out. So one standard deviation is whatever this measures out to be, 142 ticks. There's one standard deviation. Two standard deviations. Sense? Beauty of a move, though. Look at that. Felt really good to see price do what I thought it was going to. I feel like a lot lately, NQ's been a little unruly. And a lot of the OGs talk about how price just did what you expected it to do. It just came down into a level and did the thing that you were anticipating. It wasn't pretty. Like, it had this consolidation pattern. Here was a stop hunt, and that's where I was initially eyeballing this. Got in on that, but kind of pretty much broke even on that trade. And it was also, I didn't realize how minimal the movement was in this. I didn't realize it was only like a 40 tick stop loss, and so I could have doubled or tripled the contracts that I was putting on. That's okay. You know, at this point for me in this challenge, it's all about being like, just getting back in the groove, feeling good, feeling confident in my price reading abilities, because that's more what it's about than anything. More than the trade, the model, it's about price reading, because the model's everywhere. Like, I remember early on when I was trading other models, you know, and even with this model, they're everywhere. So how do you discern between an opportunity you should take and you shouldn't take? And there's two different philosophies on that, because some people say your model presents itself and you take it. I've found only average results with that, almost like break even to not break even results, and there does need to be some sort of discernment. At times, the way that the market moves, it'll allow you to do that. If you're offsides in your bias and your model appears, and you take it and you're offsides, and it does provide 2R, like, that's sometimes how the market moves. And I've seen periods of time where it's like you could get in on almost any version of your model and it would yield a positive result. And then other times I've noticed if you're offsides, the market's going to stomp on you every time. And then it doesn't become, oh, I just take my model when it appears. It's like you actually have to have your bias somewhat dialed in. And, you know, your bias needs to be on point at least 70% of the time. So, and it's also the price reading skills is what gives us the confidence in the charts. Because if you know what you know candles are doing, well, then you have, it just makes it so much easier. You know where they're going to go. Like, I was expecting to see my model down in here, and I did. So that helped with the confidence. It wasn't so much of a think like, oh, should I take it? It was, oh, this is exactly what I want to see. How do I get in on this? And the way these candles formed, it didn't quite give me that opportunity, but nonetheless, it was there. So, like, for example, pushing up in here, strong reaction through this 2.5 standard deviation. So for me, I'm expecting higher pricing. I don't think I'm going to get this. I'm expecting this now a little later on, maybe. So it's both being predictive and reactive, because you want to predict where the market's going to go, but react to it. Like over here, I predicted the market to come back down to this new week opening gap, volume imbalance. I imagined it would be a bullish reaction, and so I annotated it here on this chart that I think this is the drawn liquidity. But in this case, I didn't mark any further because I wanted to see what's the reaction here. Does my model form and provide a long opportunity, or does it just fall through this level for this liquidity down here? Because it just as well could have done that. You know, the price could have come down here, taken out all this liquidity, come down into this zone, and then reversed for bullish. So it's like both. It's like I'm expecting bullish behavior, and I think this is the level, but I'm not going to say for certain, for as much certainty as I can. That's what I believe is for me, what works is a bit of a hybrid between predictive and reactive trading. And people have different opinions. Some people say if you're reactive, you're too late. I can see that. And some people say if you force your will on the market and you predict it too much, you're going to be wrong. Whereas if you react, you're going to have a better chance at winning, because every candlestick provides some information, like even down here. I said I thought it was going to run, but it also could have at 9:30 could it come down here, taken out some of this liquidity, and then this would have given me a perfect entry, something like that, a mitigation block to get in on, but it didn't. And so this candle here, this one candle alone changed how everything played out. You can't be totally predictive because I couldn't predict that this candle would form the way that it did. No one can. Kind of checking on what's going on up here. So 7:50. I always get the time difference wrong in my head, but it's 9:50 New York time. 9:50 macro. Macros are my trading windows, and they're particular times in which I'm specifically looking for price to do something. I tend to ignore price outside of those times for the most part. It's somewhat flexible, so 8:50 to 9:10 is a macro, 9:20 to 9:40 is a macro. I can go a little bit earlier and a little bit later, and I've also been thinking a little bit about shifting these time windows. Juicy uses the 45, so for example, that this would be 9:45 to 10:15 macro. I've been thinking about opening it up there, and that was one of the reasons why I realized in this trade, I was like, oh, maybe I should just close it because it was outside of my macro, but I haven't changed my rules yet to include the window outside of that. If anything, like even if what I like about macros is they just mentally give me a break. I don't have to watch every single candlestick throughout here. I can take a little bit of a pause between. Our macros are where we kind of expect, either a continuation or a reversal. So this was a reversal macro. We have a continuation macro. And now our next macro, somewhere in 10 a.m., we usually see a reversal macro. So it's still possible. Like here's a nice inversion for a fair value gap. Let's seeing this price consolidate, maybe a little bit up in here. And then we reverse down, maybe something like that. Here's at 10 a.m. 10:50 reversal. I don't know. I don't think I would short this though. I'm not bearish. So let's examine the hourly open. There's the 9 a.m. candle, accumulation, manipulation, and distribution. So we'll think about that a little bit heading into the 10 o'clock open. My gold block levels are on the chart here, this low and this extension. I forget, we're on the 243, which the 243 for the gold block, in my observation, tends to be like pivotal swings on it throughout intraday. If there's going to be a lunch reversal, it tends to be at the low, equilibrium, or the high. If there's a low of the day or a high of the day, it tends to be about around one of those three levels. In this case, price just blew through the high gold block. Where else could we do? Go dealing range up and down. Oh, right. So here's the equilibrium. It takes off or it switches, I think this low becomes, the extension becomes the low. If I'm not mistaken. I can check it this way. Okay. Yeah, so the low, the extension switch. Price tapped into this. I better be paying attention actually, because I could miss a continuation model. Didn't miss anything here. Do it ES and YM. Finally, there looks like they're correlating. Oh, am I wrong? I am wrong. So NQ and ES are correlated, running together nicely. Look at YM. So the whole, I didn't even see this the whole time. NQ and ES were running up. YM ran down, created this massive bullish SMT. And then now they decoupled and recoupled. So they were coupled, decoupled, and recoupled. I don't know what I think about that. That's fair value gap right there. That's this were to invert. There's a stop hunt. It's kind of a nice reversal structure. I'm not going to short this. There is with YM a bearish SMT, but because they're so funny lately, I don't like YM. I wouldn't trust YM. But here's a short idea. I wouldn't do it. I'm not doing it. And sometimes they run. Like when it looks like this, there is so much liquidity down here to be taken. And I guess that's part of the observations I need to maybe further test is situations like this where I wouldn't normally short, but because of this extreme price leg, maybe I would. It's in the macro. It took tons of liquidity. There's an SMT. It closed below. Mark it in right there. And what then? Also could be a consolidation, kind of like I was predicting here. After a huge price leg, tends to be a consolidation. Coming up way too high. Short's gonna fail. Which is why I don't short it. Oh, there's an inversion. I'm wondering. There's stop hunt. There's no SMT. There's no inversion there. There's an inverted inversion, which is high probability. But that's not my model. So looking at the 10 a.m. candle right here, open on this, 10 a.m. open. So where's there's no tail on this 10 a.m. hour candle. So I'm imagining this wick forming up here on the top side. and the body forming as it retraces lower, because there's no tail on this candle currently. That's the on any time frame, the 4 hour, 1 hour, 15-minute tail. Saying there might not saying there has to be. Just from a probability perspective, that's less likely. Most candles have tail. So, see, kind of waiting at this point in time. I don't have tons to do at the moment, other than just sitting on my hands, which 90% of trading. Part maybe that's why I wanted to start the streaming, not only just to document my journey and have a live journal of it, but for these periods in time in which I know I got nothing to do. Like looking at these charts, I don't see anything that I can do here in the next macro. And it gets a little, tough to sit here sometimes for hours on end, not taking a trade. So being able to have something to do, I think would be really helpful for my trading. So that's why I did it. Sorry, kind of split. I also need to learn how to multitask better, because I want to keep an eye on the charts. I want to document and share my journey, my lessons, and all that other stuff. Engage with anybody, and I'm learning how to better do that. So price is just grinding up here on the 1 minute. The 1 minute is kind of useless at this point in time. Like, doesn't really help out a ton. 5 minute is kind of telling a little more of a story, because there's these gaps that have been unmitigated, and there's this volume imbalance and a tailless candle down here. Suggesting at some point lower pricing. Maybe it's lunchtime even. Hard to say when, but there could be a consolidation until lunchtime. Lunchtime takes out, a lunch rate, takes out some liquidity down in here, and then continues on. Like thinking about the daily profile. What's the bet? Let's go over to this chart. That off. So where is it? So like here's this formation of this daily candlestick, and midnight opening is right here. So that's when the candlestick opened. You can see the opening price of that candlestick. Price accumulated, manipulated. It's distributing, right? Let's say that that's the high of the AM session. We want to predict possibilities for what can happen. seeing all this liquidity run through here, in my head, I'm imagining some more price action. However it goes up in here, I don't know, maybe one more push higher. Then it starts pushing lower, creating some sort of flag, right? Kind of thing. And then at lunchtime, comes down here, retests the top of the range even, maybe does another stop hunt, and then continues on to form, the high of the day, the PM session. So this is that balance between the predictive and the reactive trading. And I try to really strike a balance between the two, because I don't think we can, I can't predict this. This is one possible outcome for the day. It's not be it end all of everything. Like, this could very well, starting from this point here, rallies up in the AM session, does a quick retracement, and just continues and rockets the rest of the session. So there's possibility too for the daily candle, the daily profile. Also, it could come from down up into here. It could be the high of the day currently, and it could do some sort of lunch kind of consolidation, a stop hunt, or a high of the day. And initially, this is all very bullish looking, tricks traders into going long, and then walks on all of them as it closes a bearish day. So here's the predictive side of things, right? Here's my 3 anticipated paths for price today, but I don't know which one it will be for certain. I'm bullish, so I'm anticipating a higher probability of these two. It doesn't rule out this one though. It could absolutely be this one. And that's where reacting to price is important. But also predicting, because now I have a framework for the day. I have 3 possibilities to look for, which will help my confidence when it comes to getting into any sort of model. You got to have confidence to pull the trigger. And even when you do, it's hard sometimes. There's so many other layers to it. There's a psychology of it. There's, I've taken so many losses and I haven't won yet, and so I don't know, will this trade win or will this trade lose? It's an interesting thing to be a trader. So zooming back out a little bit, I want to stay off the 1 minute for a moment. Everything so far looking quite nice. Came down into this gap that I'd predicted earlier and just rocketed up. So now there's this 4-hour imbalance, this 1-hour imbalance. This SMT doesn't matter anymore. Probably I kind of want to measure, so here's my standard deviation. I want to measure this manipulation leg right there. Yes, I should be there because that's part of the manipulation too. Just trying to project out some potential targets, because at all-time highs, there's nothing to look at. We got nothing above us other than deviations. And over here I have Asia range standard deviations. And then here I have this manipulation leg standard deviations. Beautiful, right? Manipulated London, took London low, Asia low, midnight tapped into, retested, and then rocketed up. It's beautiful. For a Monday with no news. So in the 15-minute, no tail on this candle, this massive gap, this gap, this gap. There's just all these gaps. Not what I wanted. So it's I'm bullish, but I'm bearish, right? In my eye, this is too much of a move without balancing out the price range. Look at these 2 legs, right? High resistance, low resistance runs. Everything's balanced out. Candles came back and forth, retraced it into premium, balanced everything out for the most part. So here's a gap. Price came back up and tested this gap, and then kept moving. It tested it to some extent. And this is more typical price action, right? Same thing even on this one. Pushed up, came back down, pushed up, came back down, pushed up significantly. So here we start to get some significant gaps, came back down. And this is a consolidation above before a balancing of this price, of this gap here. But bearing that in mind kind of helps give us a expectation. So in my expectation, I can't long really very easily anywhere in here, nor can I short. But I can, at this point somewhere in here, I don't know, maybe I'll draw it on this chart. Maybe I say something like this is a thought for the rest of the session and the day. My draw on liquidity was up in here, so the previous day high, that's already been taken. In my opinion, nothing more that price has to do today. It's already done the thing it needs. It's not to say there won't be more opportunities, but in terms of any expectations that I had, they were met and exceeded early on, really. Starting down in here, and I caught that. I saw it starting to form, and I wondered, oh, is this going to be the low of the day, the low of the session at least? Model started to form. It wasn't clean, and it gave for me, no entry opportunity on this breaker. Just too big for me. I was seeing too big of a stop, and for me, there was no entry there. So now I got to sit on my hands through all of this, trying to get myself a piece of the pie today. So we'll see. This is where I start to get a little bored, maybe. I have this macro indicator. Just kind of helps my mind contextualize when I need to be expecting a model get in on. So here's the next 1020 to 1040 macro. 10 o'clock tends to be something of a reversal macro. Right now I'm noticing all of these equal highs building up on the top side. Check out ES, YM, see what they're doing, see if they're correlated or not. So looking like they're behaving more or less. And this is what's been kind of tripping me out a little bit lately, with YM being so different than NQ and ES and not loading any of the price action, but there's constantly bearish SMTs with YM. I can't get this. But bearish SMTs are just failing and blowing out, so I'm not really putting any faith into the bearish SMTs, nor would I want to short this. It's not. This is getting in front of a train, if you ask me. I wouldn't do it. Updating this a little bit. So the second stand, this was the initial target that was acquired. The second standard deviation of Asia. So now I'm looking to the 4, the 4.5 potentially for some kind of touch, and then maybe liquidity taken. Boom, boom, boom. That's I mean, that's a significant expectation for Monday, and no news Monday nonetheless. Like 9:30 injected the volatility better than most. Well, I want to say that, but you know, there's a 140 point 600 tick move. That's actually significant, because initially the volatility was minimal, and when I took a long down here, I didn't realize how minimal this was. I'm used to, you know, my stops being 150 ticks. All of a sudden, my stop is 30 ticks, and I went in with like a fraction of the contracts that I should have. Now the volatility has been injected back in the market with the 9:30 open. So what now? Speaking back to these intraday profiles, you know, it's met. Oh, I am totally on the wrong chart. There we go. Here's the deviations of Asia, and looking here, expecting some push up into the 4, 4.5 creating a bunch of liquidity. So there's equal highs were just taken right up on that top side. Let's look at this. Let's look at this like let's actually call it, let's look at trend line. So imagining liquidity building up down here. Price isn't moving. And if price isn't moving, it's generating liquidity. And if it's not moving, it's generating emotions. So like people are trailing their stops all below here, doing this kind of thing. Maybe it grinds up for a little while longer. And then all these longs right here that are in profit for the morning, they're trailing their stop ups. Everybody thinks it's bullish and it's just going to continue raging all day long. They're going to get their butt smacked, and their stops are going to be ran during a lunch raid kind of thing, or continuing on in their favor, which is like what happens. It feels like as a trader, I know, especially at first when I didn't see how the markets moved, this is what I felt like. I felt like it always stopped me out. And even if it was like this, maybe it only came, a shallow retracement into these stops, and then ripped higher. And it's like, oh, the people say, the markets have to get them. Well, you just don't know how the markets move. So like right now, I'm expecting price to come down. That's my prediction. Oh, Wild Berries is here. Hey, buddy. I actually got the chat working so I can see now. No pie for you today. And I'm going to adjust this over here so I can't quite see the whole. You called 23463. Oh, you're calling higher, 23463. Let's mark Wild Berries is. And right there. There we go, buddy. All right, see you later, Wild Berries. But I'll leave your prediction up there. I'm curious to know, what is it? How'd you come to that prediction? What? Probably a standard deviation. So what's that? That's the Asia. Let's look here. Uh, 463. Over to this chart, 463. It's probably a first standard deviation of that. So yeah, we could use that. That's Wild Berries as target. And notice after that expansive move, nothing's happening. That's how price moves. Even like over here on a smaller scale. And you get this nice looking candle down here, distributing lower, making the sellers think that this is the distribution. Then it just does nothing, comes back, takes their stops, and then runs for their targets. That's exactly it. That is how the market moves. Look at that candle right there. Interesting. Curious to see how this candle closes with that kind of wick above. Would be quite a bearish indicator. We're just into the 1020 macro here. Got to get better about remembering to flip my charts. Move the recording onto the chart, the active chart. Like maybe there's some way where I could automatically have Streamlabs do that, but I don't know. I don't know. So closed a bullish closure even after this wick for me. Nice gap above, creating a flag basically. So stop loss, stop loss, stop loss, stop losses, a whole bunch of stuff. So for me, the story it's telling is quite simply, it's going to come for this. I'm not going to short it. I don't have short bias, nor do I have much for levels to come into. So 4.5 standard or 4 standard deviations of the Asia range. Usually we see 2, 2.5 is kind of a good reversal zone. So that for me is kind of maybe indicating more of a continuation profile for the day. Meaning it is going to come down for this liquidity. It's not going to be the high of the day, and instead come for the liquidity and then continue on to make a high of the day. That's my guess at this point. I don't know what you're thinking, but that's what I'm thinking. Let's check out ES and YM. All right, so ES and NQ are still correlated. YM is it's funny. It's correlated but not. It's just lagging behind. So reading order flow. I'm using fair value gaps to read order flow right now. Other people like order blocks. Ultimately, up close candles versus down close, right? Green candles are supporting the green candles. So I can use these gaps to kind of anticipate potentially when order flow is changing. But it's been a beautiful morning. Like even just watching this price action hasn't given me entry opportunity. But look, and one of the things I have on my to-do list, infinitely long to-do list, like I'm sure anyone else's to-do list, is I wanted to look back at the 930 price action over the last couple of weeks on the NQ. What I'd noticed quite often the last couple of weeks is pre-market was beautiful. The moment 930 opened up, 930 went into some kind of crap seek and destroy kind of thing. Wore out traders. Like even for me, I would be sitting there for an hour, 2 hours, and it felt like the moment that I left, shut down my recording, my stream, is when price decided to finally to distribute one way or the other. And so it's been really refreshing to just see price want to move at 930. Now, it would have been even better if it gave me an entry opportunity, but what do they say? You can't always get what you want. But I got what I needed, which was I got to see price do what I wanted. I got to see price do what I thought it would do. So let's zoom out a little bit. We still have this tailless candle. Oh, that's right. I want to start. Let's do this. Kind of studying and thinking while I'm waiting. Look at this. So I don't want the gold block, but what I want is this power 3 candle. And let's just look at the 1 hour. Oh, it does have a tail. Look at that. So the 1 hour candle, denoted by the hourly open here, I didn't think it had a tail. So that to me told a story that was going to say price needs to come down in here and put a tail on the candle. There's a lot that still says we need to come back down further, both the lack of tail on this candle and a lot of this inefficiencies down in here. So for me, I'm looking at this as like maybe it's a compression candle. Over here. So it's not very often that you get gaps like this stacked upon gaps. So it can happen, but I'm anticipating this candle coming down in here, right? It can be some sort of compression candle or whatever, but the next candle, however this closes, come down into here to some degree, even if it's just a little bit, or tapping on, continuing on. That's my anticipation. Over here, we can see examples of that, like right here. Let's tidy this up just a little bit. So here's this fair value gap. And notice that it's like here's a compression candle right here. One. This third this third candle takes liquidity on the buy side, and then it starts moving down to tap into this fair value gap. And what it does is it mitigates a little bit of this inefficiency right here, but it also leaves all the rest of this gap untapped. So like if this candle right there, these candles had come down and even to the center line of this fair value gap, right? Come down into here, or even down into here, like especially down in here. There would be no reason for price to come back down in here unless it's actually bearish. What this does is, even though I'm bullish, this whole thing here gives me a lot of interest for price to come back down in here and do some mitigation a little later on in the session. Oh, there is Timmy. Good morning, my brother. Good morning. I actually got my chat working and everything else, so now I can see me friends. God bless, brother. Looking like my football for more upside. Exactly. I'm expecting some kind of stop hunting upside too. It's slanting up pretty good. This would be one try with a double stop. I'm just watching today when I can. You must be working, my friend. Yeah, I'd like to know more about your football flag. If I'm understanding your football flag correctly, you're expecting some kind of stop hunt, and I don't know where you're expecting it. I'm expecting kind of probably down in here a little later, but you're expecting some kind of stop hunt for continuation to the upside. And if I'm understanding you, you'd have a double stop loss. So maybe, oh right, you were saying double stop loss because your stops were getting disrespected. Is that right? But yeah, this kind of the idea is like a football flag, diamond. Is that right? I know you're probably working, so I'm just talking. But either way, Timmy, brother, thanks for popping in, man. I appreciate it. So I don't remember what I was saying, but let's clean this up a little bit. Well, that's cool. We got Wildberry stopped by. Timmy stopped by. Timmy's saying ones that I am iffy on, I will put a double stop because they fail. When they fail hard. Yeah, I remember you saying that. I think it was just last week, actually. So zoom out a little bit because nothing is happening. Let's look at the 5 minute. So on the 5 minute, this whole flag here, as Timmy's calling it, which it is a flag. It's all balanced. I'm noting this volume imbalance on the 5 minute. A nice little sell side target for a stop hunt. So here on the 15, there's a tail. There's a volume imbalance here on the 15 too. Currently, this is inefficient right there. And of course, this gap extends now all the way up to there. Far away as this is getting from the original consolidation, I don't think that price is going to come down that far. The lunch session, which I don't even know what macro are we in. We're in the 20 after, 20 to 40 macro. So time cycles, let's look at time cycles. The gold bach, we can, well, I'll come back to that. Clear manipulation, clear distribution. So this is the accumulation cycle. They're shifting, right? It's saying AMD distribution. They're shifting. The manipulation was here, and this is the distribution. So the AM manipulation happened on this 270-minute time cycle. Oh, that's the 270 probably. So then yes, distribution. And then within that, accumulation, manipulation, distribution. And is it not showing? Yep, accumulation, manipulation, and distribution. I was curious to look at the 81 gold bach. Which is better for like intraday targets, levels. So just came above, pushed through the high of this gold bach range. The gold bach ranges are just like this, basically. So here's one. Here's two. Maybe. So, right. Here's another gold bach range, just a premium and discount range. So price came down into the discount of this range, blasted through the high, completely blasted through this range, and it's now finding support above this range right there. But these are also fractal, just like price, and the 243 going to be made up of multiples. See, look at that, right? The 243 is 1, 81, 2, 81, and then a third 81. Up the 243. And I don't really know, like I'm not a gold box scientist like some of the people are. All I know is the intraday high, low, those kind of things. There, lines up with the extension if I do it perfect. The intraday high and lows, I've mapped them out a ton. The intraday highs and lows really do tend to form around these gold bach levels. So my journal is journaling is my superpower. I'd be willing to bet I'm one of the best journalers. I hope it pays off because it takes me a ton of time. I document so many aspects of every day, and I'm looking for my document. Gold bach levels. Just pull up any browser. Oh, dang it. I'm on the wrong screen. Here we go. So gold block levels here. Just how this is a 5-minute chart, and this is the midnight open time-wise. Just noticing how price really likes to respect it. Like it found support on the equilibrium of this gold block level, came up to the equilibrium, the 1.5 on this one, and just notice how these levels are great intraday levels. Quite uneventful. I don't know if anyone out there's taking a trade today or not. I'd love to hear. Timmy saying, I like using the pivot points indicator. The pivot point standard indicator, it's math from yesterday's movement as to where it should go today. It's the same minute 1 through minute 15 when they change. Okay, so it's a like a fractal kind of thing. I think I've actually looked at this, pivot points. Go with the Lux algo. So here it's let's see here, missed pivots style. Missed pivots will make gotcha. This is a little different than what I was thinking of, but that looks cool. Like, I'd be curious to study this a little bit more and watch it print. See what else there is. Oh, you're saying regular pivot point. Let's zoom out a little bit, check this out. Gotcha, if this is it. Look at this and see how it lines up with gold block. I'm gonna clean this. Actually, I want to use this gold block indicator. To go. Yeah, you'll have to show me, Timmy. Like, post a link in one of the discords. I'd be curious to check this pivots out, because if this one isn't it, but it's interesting, it's very similar to the idea of the gold block and the standard deviation, right? Like the hoopla being these fixed range deviations that we can anticipate price coming into, like this one right here. Found support on that one. It's going to start grinding through them, and we have a bullish bias. We just expect it to push through and retrace at these levels. But yeah, post a link to that one for me, Timmy, or at least a screenshot so I can see. I'd be curious to check out which one you're using. All right, refocused. What is happening? Nothing. A big old flag. All right, 4 standard deviations has been met. And where's Wildberry's target? Oh, what did he say? I took it off accidentally. Let's put that back on. 63. 463. 63. There's wild berries. Timmy's saying there in the Discord. Good point. Yeah, that's like the one I found actually. The orange one, maybe? Yep. We can leave that on the chart. All right, cool. So S and R. Okay, so that's that indicator. Auto settings selects one-day chart. Base values. Support and resistance idea. Okay, gotcha. Yeah, that's interesting. Because it just like the gold block, which makes sense because if the daily pivot points tend to happen, reversals, etc., around gold block levels, and this is also calculating pivots based off of previous price action, then they're going to both be quite similar. That's interesting. Feels like a coincidence, right? So Timmy, you're saying you did a back test session on your football flag and it did very well. I just got to follow my rules and risk management. Super simple, but our caveman brains need wired. Mine does at least. Dude, same here, man. My big thing for this week that I'm working on, my big struggle currently, is I'm just going to check out price real quick. So yeah, this to me feels like, is this going to be the session high? Expecting that to invert. Let's put some macros on the screen. You know, like my big struggle right now is this right up here. He says, don't move that stop loss MF. That keeps screwing me up big time. And like even in the case of this morning, I took this long, Timmy. And I took it on one of my big accounts, my 250s, because I figured, oh, well, I'm not streaming. My rule is I got to trade this 50K while I stream. And I went break even on this trade. Look what it did. And I keep screwing myself because what I'll do is I'll get into a trade, and here I justified why to get out of it. I said, well, it was outside of the macro. It's pre 9:30. I need to get this. I want to get the stream recording so that way I can not have to focus on this trade. It's consolidating. So I think I entered like right. Where did I enter? Yeah, I entered on this candle somewhere. It doesn't matter, obviously. And I entered on that candle right there on a different account, and I went long, and then I justified all the reasons why I should go break even. So I went break even on the trade, or obviously it was somewhere in there. And look what happened. And then once I go break even on a good trade, then I get the impulses, and I'm just sitting here bored and I'm waiting. And then I do something stupid because I'm trying to get my piece, right? And so many of these, I've documented all these break-even trades that have been winners. Like it's like 80% of my break-even trades are winners. Yet my primal brain just wants to protect everything. And so I get what you're saying, Timmy. You know that for you, your primal brain's doing something a little different, but we both have a primal piece of us that's kind of screwing us up. So for me this week, and I came into this week saying I'm not going to go break even on trades, you know. And then yet, what's the very first thing I do? I go break even on a trade. So, I don't know. Oh man, we got someone new. Good morning. No skills. I like that. I like that. No skills. How you doing, man? Are you trading today? Have you got a W? Did you take an L? Because I don't know if you've heard this before or not, but we're here to lose, right? Like, that's why we show up. We show up, and everybody comes in the charts, and they're like, I'm ready to win. I'm ready to make some money. But how often do we come to the charts and say, I'm ready to lose? Like, I'm okay. I accept that losing is a part of this game. And back to the primal brain, like Timmy was saying, the primal brain does not like that. It does not want to lose the food. It does not want to lose the battle and lose your life. So it's so against our thinking. So confirming an inversion here, I wouldn't short this at all, personally. Equal highs above. All right, so we're back in the macro. Turn the macros off. Tapped into 4 standard deviations. Timmy, you did the same thing? Oh man, you took that on demo and went back to break even, and it went straight up. Man, I know, right? And it's funny. Tim, you're saying, like you've said many times, that you over leverage, right? You know what you're doing. You know how to read price. You get in there. You know your model, and that you get in there, and then you just over leverage, and that's the thing that's getting you. Yet you keep doing it, and then same for me. Like, I just go break even. That's my thing. That's my version of your over leveraging. So you're like on the greed side of the spectrum, maybe, and I'm on the fear side of the spectrum, the protective side of the spectrum. Maybe this is the manipulation down to keep blasting that, or it's going to wreck all the longs. Yeah, I mean, good question. That is the question, right? How far down to go? I mean, look at all of this inefficiency down here, man. This gap is huge. Not an inversion, but just a fair value gap. Are you working today, Timmy? Are you like on the job? 7 minutes till this hourly candle closes. If I had to guess, I do think it's coming down for this gap. I think they'll just at there. I think this is my minimum. I think it's, oh, there's another gap I just saw on the 5. The volume imbalance, fair value gap combo. Question is, how bullish is it? Right? Much of a discount does it want? I do like how it's left some equal highs up here. Oh man, they shipped the wrong color cabinets, and then now you got to paint them to fit the kitchen or a bathroom. That's a bummer. More work for you, huh? Most are looking to short now, so they might just blast. Yeah, exactly. So I guess I should be on my toes looking for that long. Now that we say that. So a little bit of sell side was taken. Tapped into a 5-minute fair value gap again. Or no, it's not a fair value gap. I missed that. I didn't see that candle. So I don't have any, for me, I don't have any entry possibility until down here. Yeah, I know. Same here. If I short, if I short this, I'm gonna get wrecked. Guaranteed. Oh man, that's a pain. A whole kitchen's worth of cabinets. I don't know how big the kitchen is, but if it's like my kitchen, there's a lot of cabinets. I mean, we have a big kitchen. Part of that's by choice because we, grown a lot of our own food historically. So my wife does a lot of food preservation and processing. So we make everything from scratch, pretty much. Like, we don't have any food near us. There's very little to eat in terms of like restaurants. The town we live outside of is 800 people. There's a couple of restaurants, and like part of it is like any of the food that like is of quality. And we like to eat higher quality food to just like I feel better, more energy, don't get migraines. So for me, like I've taken a bunch of the stuff out, like gluten. As much as I love bread, and my wife has a saying, "Without bread, you're dead." But where am I going with any of this? Right. So we have a huge garden, grow tons of food. A little less so the last year or two. We've been focusing on a few other things, but massive kitchen, all these countertops, all these cabinets, all this food processing equipment. So my wife can harvest and preserve a bunch of our food. We have hundreds of pounds of food stored, canned food. I think we did the math at one point, and it's like in the case of an apocalypse, we have enough food for like a year or something. There's 8 foot tall parts from some rich people, so it's big. Well, that's good though because you want rich people for clients, man. They're generally easygoing, right? And they pay well. It's the cheap MFs that tend to really be a pain in the ass clients. At least in my experience when I was doing client work. Um, Zooming out a bit. So here's a 5 minute fair value gap. Just kind of reading order flow at the moment. Not that it can't rage from here. I just don't have any entry criteria, all the entry criteria met for long. So 15-minute took the previous 15-minute low. 1 hour took the previous 1 hour high. 2 minutes till this 1 hour closes. And my cutoff time is for me noon. At that point, I'm going to put a line there. So I remind myself. At that point, I need to like take a break. Yeah, 100%, Timmy. They pay better. They understand that good costs money, right? It's that triangle. You either get it good, quick, or cheap. Pick one of them, right? Or was that how it goes? Pick two of them. All right, so that inversion's holding up so far. But this kind of price action used to wreck me previously. Thankfully, I can generally avoid it. Like if I do get into it, say I for whatever reason saw this as a short right here, I generally am pretty good about not getting wrecked, taking my loss and walking away. I'm imagining some quick distribution, right? High resistance, low resistance. Looking at the left side and the right side of the curve. Look how it's respecting your pivot points level, Tim. Labels, support and resistance. Right now, I don't have any. Well, the gold block levels, they're there. Let's put on all the gold block levels. How it lines. Timmy just took a demo short. I see my model on the 15th, so he's gonna try it. Right on, brother. Good luck. I mean, I would agree. It's time for price to go down. So in the gold block, this is the liquidity void level, the breaker level, the mitigation block level, fair value gap, the order block, the rejection block level. That's what I think is neat about gold block, Tim, is that it's the levels in which we should expect to see PD arrays form in. And it's ICT's PD array matrix built into these levels. So like, here's a breaker level. Well, here's a breaker. Bearish breaker. That. Look at that. A bearish breaker in the breaker level. Timmy's aiming for the bigger fair value gap around 360. Timmy's target. Oh, interesting. Your flags are a breaker play. Yeah, interesting. Definitely slow right now. The 5-minute fair value gap is being respected. So at the moment, like you're on sides. Just a little bit. What was this? The Asia. So yeah, I mean a lot lines up here, right? 4 standard deviations of the Asia range. This is also standard deviation of the manipulation leg below. Turn off these. Oh, pain levels on. Look at that, some equal lows down here. I got a feeling I'm not going to get my long before I got to go. Take a break. Then looking at this, 1020 macro so far provided the reversal. No model for me up there. This inversion, that's where I could have gotten in on a short. I would have done a 1-to-1, which probably lines up about with, yeah, your target, Tim. Quickly. Grab something real quick. Oh boy, oh boy. Low, man. Oh, look at that. See what this candle right here does. I want to see it sink there. Is there anything on the 5-minute worth noting? So here's an implied fair value gap. Maybe something like that. There's an implied fair value gap right here. I would see it failing personally. Oh, looking at the 1 minute again. Look at that. Boom, look at that. So sell side right here, volume imbalance, fair value gap and volume imbalance, but those volume imbalances are like magnets. Kind of like tailless candles. So it looks like distribution lower. So 15-minute volume imbalance right down here on top of these fair value gaps. That's the first opportunity I may have to get long. Yeah, man, the short's playing out. Nice work. Let's go. LFG, man, LFG. Now this is a breaker 2, breaker inversion. Oh, where's the football? I see. Ball. Where is it? Where is it? Oh, can't you anchor an icon? I guess you can't anchor an icon. They got berries as target up there. There we go. I'll put the... Or I guess they're just going to move. So, it doesn't matter. Fuck that. So, kind of waiting. Super high resistance so far coming down here. And would expect some movement if we break this these swing points here. It just doesn't want to go though. Take a look at ES and YM. Haven't looked at them in a little bit. Not correlated as usual lately. ES is already starting to turn around. YM is just doing its own thing. So it started coming down before ES and NQ did, and then it started pushing up again. I feel like YM has kind of been leading lately, and it's been doing its own thing. They're just not correlated currently. So at this low, we have these, that was taken There's a bullish SMT down there. One minute outside of macro. There's here's an inversion breaker, 30-second breaker. It's got SMT. It didn't even tap into a 15-minute gap though. Tapped into a 5-minute applied fair value gap. I don't trust it for a long. Yeah, put a football sticker in there. Way up here so we can keep track of it. I got it for Timmy's target. Is that your target if I remember 360? All right, back over here. Which for me, like that's what I want to see too. I want to see it come down into here. It's just not going there. I want a long down in there. And even up in here, I would still consider a long. Oh, on the wrong chart. Up in here. I want to see it come down here. I really don't want to long that. Unless it's exceptionally bullish, in which case that would be the long. I'm just not seeing it. It's implied fair value gap. On a 5-minute, I wouldn't take a 5-minute level. I guess I should mark this. Evident. I mean, I guess it is a 15-minute implied fair value gap. I don't know. Okay. Look, I'll clean it up with that. And also there was no session liquidity taken. High probability liquidity. Something like that. I mean, look at that 15-minute closure though. That 11 a.m. candle. That's beautiful, beautiful bullish closure on that candle. 15-minute fair value gap, Dibby right here. Volume imbalance and a tailless candle. Really, that fair value gap could include that volume imbalance. That for me is a later target. tailless candle here on that 15 chart. That's a beautiful target for later. What else could we dig in? Sink our teeth into? Light volume imbalance on the 1 hour. Because if it's super bullish, it could just tap into that volume imbalance and want nothing more. Where's that one at? 376. 376. So the volume imbalance. Okay, so that volume imbalance across all time frames, 376 level. That's where I would want to see it go to. So here's my first draw on liquidity somewhere in this zone. I anticipate it digging deeper just because of these relative equal lows here. Oh, those are equal lows, actually. If not taking sell side right there. So this breaker here, this bullish breaker, we kind of have the bearish and the bullish breakers at the same time. Here's the first bearish breaker. But here's the one version in it. They're fighting right now. The bullish breaker, in my eye, is failing this volume. Oh, there's a volume. There's all these volume imbalances down low. Those would make me sketched out to take that long. I'd annotated that I was sketched out to take. Yep, it's just my goodness. It's starting to get a little boring. It was all exciting this morning, right? Raging out of the open. And then most of the session has just been chop, chop, chop. See how it came up and just took the last high of the football and dumped? That's why I trail right and look for a re-entry if it's funded. Yeah. So you're saying right here, came up and took this high. A little stop hunt, right? And actually, that would be a I didn't see that. That's a continuation model too from this equal highs, stop hunt, SMT. There's a 5-minute gap above. Like I could have shorted that. Because at this point, especially now, it's like, well, yeah, it's in a sell program for at least a little while. And, you know, now that I think about it, you know, is our mentor, Master Friend would say, the objectives were met for the day. He expects nothing else other than price. And for me, like this external range liquidity, his friend would say, has been far exceeded. That was my target, just to see the 4-hour tap into internal range liquidity and then go for external range. So it's Monday. There's no news. Is that what we get? And then the rest of the day just grinds. What do we got? 37 minutes left on this hourly candle. 7 minutes left on this 15. Look at the wicks down here. Take a look at like this rejection block. So price tap down into this 15-minute rejection block, into this implied fair value gap. Is there any bullish SMT? So the SMT indicator is showing a bearish SMT. I'm pretty sure there's a bullish SMT, but YM is off in la la land, doing whatever that pleases. So yeah, there's bullish SMTs down here. There's bearish SMTs. Yeah, you're thinking the same thing, Timmy? This is what I was saying earlier. It's like, I know I reach my limit after a couple hours, right? And that's when it's going to do something, right? Remember Master Friend would always do that, like in the PM sessions. We'd be like, I'm shutting it down, guys. And he would shut it down, and I'd still be sitting in my computer, even like maybe journaling or something, and it would go wha-bam without us. Now it's going sideways. One of my rules actually is if the 5 or the 15 is consolidating, I can't take a trade. And the 5 is consolidating, starting to get the zebra pattern. Dreaded zebra pattern. Yeah, that's right. He would just laugh, and he'd be like, he acknowledged it. He would say that I'm shutting it down, and it's so it can do something. I've thought about that too. At like even some of my trades that I've exited, it'd be like, oh my gosh, it's doing nothing. I had one like last week, I think, a long I went in on, and it just did nothing. It was just dragging and dragging for like 30 minutes plus. And eventually I was like, I got to go take my kid to swim lessons. Actually, just realized, I was like, oh, right, I got to remember swim lessons today. I got to take my kid to swim lessons. I went break even on the trade. And then like 2 minutes later, it ripped to the targets. And I was like, oh, come on. But like I had to shut down the charts. I wasn't going to roll the swim lessons with a trade open. That's how the market's built, right? Like it's built to wear you out. What was that quote I heard someone say? Gosh, I can't remember it. Well, maybe it's written over here. I've shown you, Timmy, my scripts or whatever, and this is how thick it is. Like all these psychological reminders that I'm reading most of the days. I had one in here recently. On the back, probably. Life is a war. Every day is a war. You're at war with your discipline. Your dreams and goals are on the other side. That's not it, but that applies similarly. Like we're at war with these markets in a way. The war is not to let them wear you out, right? We want to be in the flow. You know, Justin Weirlin, the ICT trader, Timmy. You know, he talked a lot about like the strength and submission in trading and how that relates to strength and submission in God, you know, and that we aren't here to force our will upon the markets. We're here to submit to the markets, right? And that's exactly what today is. It's submitting to what the market's not wanting to offer anything. Maybe that's even what Friend would talk about is the market offering anything? And we're submitting to that fact versus forcing our will onto the markets, onto the trades. And Justin said the market in its complexity operates within a divine order. While chaotic at times, it's ultimately governed by patterns, algorithms, and cycles that transcend our immediate understanding. In the same way, many believe that life unfolds according to a divine plan. By submitting to God, we trust that what we truly need and desire will come in due time. Similarly, by submitting to the market, we're trusting in its structure and flow. And the trust is freeing. It removes the mental clutter of what if and allows us to focus on what is. And I thought that was a really beautiful statement by Justin. I don't know if you've checked him out or not. Yeah, you've seen his psychology stuff? Yeah. Good. All the while, I forgot that I was staring at the charts. And it's still not wanting to do anything. Lows were swept. Intermediate high was swept. It's going to sweep this high probably. But is it just generating more sell side? Or if a sweep lower? Kind of thing? Best loser wins, which is a good one. Yeah. Who is it that did the best loser wins? It was that older gentleman, isn't it? And he's a traditional retail trader, I think, isn't he? Oh, here's Timmy's demo trade. Nice. What time do we got? 9 to 11:30. Got to do the time conversions, right? Going from Mountain Time to New York time, 2 hours difference, which isn't the worst. Like I couldn't imagine being a West Coast trader, which is an extra hour past me. I'm in the Rocky Mountains, so Mountain Time, or let alone like in Hawaii. I lived in Hawaii for a while, and that's 4 hours behind here, which would make it 6 hours behind New York. I don't know. I don't know how you could do it. Like I see some traders, across the world get up at ridiculous hours. It's like hard for me to wake up in the morning with a 2 hour difference as it stands. Like I have this routine where I try to do a bunch of things to wake myself up, including getting some movement in. Like I can't bring myself to quite exercise in the morning, but to at least do some light movement, maybe shadow boxing, kind of stuff over on the mat before I sit down on my charts, just to try to wake myself up. So really just have this accumulation range happening, lower time frame. Five minutes looking a little ugly. On the 15-minute, this candle here, see how bullish that is with rejection block being respected? That to me is, it's going for more sell side. I'm not going to lie, I kind of want to short it. So SMT tapped into the 15. I see my targets down below. Stop hunt. 60 ticks. $30 per micro. Yeah, longer football. I wanted to see here. SMT, multiple SMTs. Although the 1 hour isn't confirmed, this is saying a 1 hour consecutive candle SMT. Obviously, that doesn't confirm until the next hour closes. So 15-minute SMT. No, not that candle. This candle closing confirms a 15-minute SMT. There's SMT up in the top right there between those two 15 minutes. Part of me says it's not going to run. I'm just going to be sitting here in a trade. But I feel like it wants sell side. One mic unfunded. Sweet, dude. For a short? You added in unfunded? Looks like Jesse was a good boy today. Said he didn't take a trade. One of my other mentors, Hydra. I streamed with him for like 6 months, and I really appreciated how simple everything was for him. He didn't overcomplicate it. He kept it simple. But he was good. He generally nailed it. And he taught me a lot about keeping emotions in check and how to get through a trade and how to work through the emotions. What was I going to say about Hydra? I forget. I had a point behind what I was going to tell you about Hydra. Oh, and that's right. So towards the end of what my time streaming with him, like I was on almost every morning with him for like 6 months. And one thing he said towards the end there is he was saying that the Mondays are the new Fridays. And here we are. Coming up for some more buy side liquidity. Oh, there's equal highs up there. Notice those two equal highs. And it took those. Nice little stop hunt. Building up some more of this liquidity on sell side, this trend line. High probability liquidity. So we have, relative equal highs and equal highs. So in terms of high probability liquidity, relative equal highs, trend line liquidity, inefficiencies, and then tailless candles. The way it's looking to me at the moment, maybe it might not come all the way back down into here, but it feels like it wants to stop hunt. Then I would imagine some kind of rebalance into this liquidity, very least. But I could be totally wrong. Could be off sides. If it's bullish AF, it doesn't need to do what I think it's going to do. Now does it? Oh, I'm on the wrong chart over here. That's what I was showing. Take this tailless candle, come down for the sell side, maybe come further, maybe not. I don't know. I don't know. Accumulation, manipulation, distribution. I would like to shorten a premium, but there's no fair value gap. No inversion for me until the discount of that accumulation range. So I don't have anything to do right now. Fair value gap, not an IFG. Um, Curious to see where this 15-minute candle closes. They're just gonna take liquidity up in here, then continue running. This candle right here that I like. What I don't like is how this candle did not close above. Closed above the 50% of the consequent encroachment, which is good, but it's still a bearish closure. Looking bullish, but we still have a third of the candle left to print time-wise. 5 minutes, so here's the... And so like this fair value gap, it keeps getting ran through. It was super bearish, like it would have done its thing already. And so the fact that it's digging up into this fair value gap, I don't like for a short idea. Unless it wants this tailless candle right there. But I would have liked to have seen it wick up in there and then slam down. My prediction here was to come down. I was expecting somewhere in here. Still am. Look at that. 5 minute this 5 minutes going to close with a nice rejection block. Probably. Second to go. Yeah. Look at that. Sweet little rejection. Now the 5 and the 15 just could start going sideways too, right? Timmy's short from 39, 399.75. Cool. So yeah, it's right around your entry on your funded. Equal highs were taken. That's nice. Now it's just grinding up. What a boring day. It started out so exciting. I mean, that opening was just amazing, wasn't it? And we have just been between this high and this low in this range all morning. What am I looking for? What am I looking for? Oh, premium discount. So haven't left this range today. 950 macro. So that's ending the time is it? The 1140 macro. Just waiting. But now, well, this is the kind of price action that hiring, and I see where it's going. I feel like, and I've seen that since 10:35, an hour and 15 ago, and it just went sideways. So I think I'm gonna shut it down. I think for me, I'm ready for a break. I might come back. I was expecting something like a continuation move to capitalize on. Instead, it just gave consolidation. So good luck to all of you who are in trades out there right now. Like Timmy, your short might be playing out right as we speak, and that makes me wonder a couple things, like my short idea right there. But I think at this point, I'm ready for a break, so I'm going to call it a day. God bless you all. I hope you have a wonderful, fantastic